Alright, hello everyone, welcome to Trade Breakdown on EU. Now, this is a trade breakdown from last week. It's a bit delayed because I was traveling and I had a sore throat, which you could probably guess from my voice, but forget about it, it's not a big deal, right? Now, let's move on to the breakdown. Okay, so we're gonna start off with the 4 hour time frame because that's where the trade idea was based on, right? Now, based on range trading, we know that what happens is that we get this range low and range high right here. And what happens is that price ranges or consolidates inside this range. And then when price is about to break out of this range, what happens is that price first takes out one side of the range or one extreme of the range, and then the drawn liquidity for us becomes 50% of that particular range and then the opposing end of that range, right? Now what you need to remember is that even when price continue its journey towards the opposing end of the range or our drawn liquidity, it doesn't move straight away in a straight line, right? It always moves in expansions and then retracements and then another expansions towards those drawn liquidities. Now the first retracement of the after the expansion occurs when 50% of the range is taken, right? Or an inside range high or low is taken, right? In this case we've got this inside range high which was taken, and then after that we had a retracement towards either a key level on the same time frame or a higher time frame, and then we continued our journey toward the opposing end of the range, right? What happened is a price and that retracement profile test a key level, and then again it continues its journey higher and reaches the opposite end of the range. Now here on the chart you can see that we've got this range low and this range high right here, right? Now what happened is that price took out this range low, right? Now based on range trading mechanics and dynamics, after a range low is taken, what happens? The thing that happen is that then price starts its journey higher, right? Now what you also need to know and remember is that choosing a range high or a range low also has a proper framework and logic behind it, right? And it takes a proper thought process in deciding the range high and range lows. And also there is a huge higher time frame framework behind it, right? So you're gonna learn all of this in later chapters, and don't worry, I'll teach you those things at the right time throughout these 7 levels of CPI. But in a nutshell, this is how range trading works, right? You should note these things down. Now going back to the charts, we can see that after price took out this range low, our drawn liquidity became what? It became the opposite of the range and the 50% of the range, which is this high right here, this inside high right here within the whole range, right? Now price expanded higher and took the range high and 50% of the range, and after that you know what happens more often than not. Remember what I told you a moment ago. More often than not, after price takes out an inside range high which lies in the 50% of the range like this, right, or reaches the 50% of the range, what happens is then price has a retracement profile, and after that retracement profile price either expands higher or continues journey lower. Now in this case what I did is I expected this range retracement profile on the 4 hour with a 15-minute entry, right? 15-minute time frame entry. Now the thought process behind this was based on a logical framework. So first of all we took out 50% of the range, which is this range high right here, and now based on that we can expect a retracement profile before we can move on and expand higher and continue our journey towards the opposing end of the range right here, right? Now another thing is the time of this retracement profile right here. You can see that if we plot on the opening times on this day, Thursday, you can see here we've got this opening time there, here, and there we got the closing time of Thursday, right? Now you can see that right away after opening time we went straight away into an expansion and took out that range high right here, right? And we already had a huge expansion for the first half of the day on Thursday, and now we can potentially cap the daily candle range and retrace and form the wick high of the daily candle. Now obviously if there wasn't any thought process like this, then we wouldn't have expected anything as such, but right here we've got a proper reason as for why price should retrace before moving higher, and for that we matched it with the daily intraday time of New York kill zone and London close kill zone, right? Now based on intraday profiles, if London kill zone has had an expansion move and that expansion has now tested a higher time frame key level like this, then during New York or London close scale zone we can expect either a retracement profile or a reversal profile. And in this case I expected a retracement profile during the New York and London close scale zone, right? Our first objective is gonna to be expect a retracement profile, and then we're gonna see the price action on the lower time frame and decide whether we want to expect a reversal profile, right? And want price to continue going lower, right? Now after that retracement profile is ended, price can again go to another expansion profile again and continue its journey higher. But in this case I exploited this retracement profile here on the 4 hour on the 15-minute time frame, and I took a short trade there. That's the logical framework and thought process behind the trade idea. Now right here you can see that price took out this range high with this big candle right here. And coincidentally, this candle is formed at the 5 a.m. Eastern time, right? So this candle has taken out a key level in the form of this range high. It's formed at a key level, a key time, right? Which is the 5 a.m. key time. And not only that, it was purged at a key time, which is the 9 a.m. Eastern time. So you can see based on these factors, we can potentially regard this candle right here as a CRT for us, and we can trade it on the lower time frames, right? That's why based on all this logic right here, after price took out this CRT high at a key time, I went down to the lower time frame and started looking and waiting for my entry setup, which is basically in the form of a model 1 entry. Now let's go to the 15-minute time frame and see how I took my entry on the lower time frames. Now you can see right here as this is the CRT high, right? This is the CRT low right here, and this is the 50% of the range. Now I waited for this CRT high to be purged, right? And as soon as this high was purged at the 9 a.m. Eastern time here, after that I waited for my setup, which is in the form of model 1 entry, which is basically an order block entry, right? So now you can see that this candle right here is the candle that dug above this high right here and closed above inside of it. Now what I did is I waited for this candle to be engulfed, meaning I waited for price to close below this candle, and then I waited for price to retest that order block, take my entry there. My stop loss is going to be above that order block, and I targeted the opposing end of the ranges, the 50% of the range and the opposing end of the ranges. Now here what I did is only targeted for 3 hours, because the daily candle had already capped and now the daily candle was about to close, right? Which usually is a time for ranging profile to start. So for that reason I closed my trade right here at this time and took my profits. This is how my trade looked. Now I could have held it down towards the opposing end of the range and I would have made a lot more profits, but I took my profits at the right time and closed my trade objectively, because I knew that the daily candle was about to close and price was going to go to a ranging profile, which it did, right? So now this was the trade breakdown on EU. One thing is you need to remember that you have to be content with what you receive from the markets, right? And never see perfection. If you are going to see perfection every time and always adjust your model based on just a few minor factors, then it's not going to end up good for you. Your objective as a trader should be always to only follow your brain and follow your routine consistently with discipline, right? Now based on all of the breakdowns that I've shared with you till now, you could see that all of my entries have a specific logic behind it, and almost all of my entries are pretty much the same, right? And that's exactly what your aim as a trader should be. All of your trades must look like the same, feel like the same, and obviously they're gonna look the same, so they're gonna be boring as fuck, right? This is exactly what your aim should be. You should see a proper theme and a proper pattern behind your trades, and the thought process, the higher time frame thought process and the lower time frame entries should be the same and look the same and feel the same, right? That's your aim as a trader. And obviously it's going to be boring, it's going to be repetitive, and that's exactly how it's meant to be. If you're always seeking for excitement, then I'm sorry, but it's not going to end up good for you. Yeah.